All right, good afternoon. Thanks for tuning in. As always, want to make sure I set the reminder that this is not financial advice. This is just education, entertainment, my perspective, the way that I do things. So, wanted to start with just a view of the economic calendar for this past week. Just a refresher, if you will, from two videos ago in which I was speaking about how busyness could be potentially expected around the times of these reports being released, specifically speaking about those red and orange folders that you see that have USD to the left side of them. Those are going to be, from my experience, the most impactful on the U.S. equities market, which is what Dow Jones is part of. And so now that we've got that out the way, of course, the method, right, top down, just gonna start with a snapshot of the monthly. We still see that so far for January, we are inside of December's trading still. Weekly, I don't honestly remember if I had this fib drawn up here, but we'll talk a little bit about that since obviously you're seeing it now. So there's a lot of different ways in which people use this tool. So the Fibonacci tool, if you look up Fibonacci, you'll see there's something about like number sequences and stuff like that. I never really did that. Just once I was showed this as a tool for looking at the markets, I've throughout my experience now changed up, right, the settings and the ways I use it and stuff like that. But just to keep this simple, I like to use body to body so that I can get the bulk of the volume within the range, right? I want to measure the bulk of the volume. So I pulled this fib actually from the body of this candle just because even though this is the opening of a down closed candle up there, it's still the highest body, open or close, right? So I use that and then I use this as the anchor point for the low end. So measure that range from this high down to this low and anything in between. Well, so this is the 50%. And then these are the what's called optimal trade entry levels from my mentor ICT. He was the one who really put me on to using these specific levels, but just more so just denoting like if a trade was to happen with high probability conditions, it would be somewhere around this area. But particularly the way that this fib is set up, that those setups would be for the market to resume lower, right? But the premise for this week from the two videos ago was that we had a daily swing low, and I'll just I guess drop down to the daily now, right? We had this daily swing low confirmed on Thursday, right? Once Friday closed. And so the path of least resistance would be just for price to trade higher. So real quick, I just want to just finish doing a weekly analysis though. So we had traded down to this, right? This weekly level several times, and we'll see on the daily chart it was just consolidation, but we finally started to pick up and trade away from there. And then this is this past week on the close. As you can see, we had some trading lower, but didn't even trade below the body, the open body of this candle, this week's of last week's candle, basically, and price rally higher. And so now daily chart. So again, is that consolidation, right? And we see that this was Monday. So like when the market opened on Sunday, we had some trading higher. Then we closed lower down here. So we had a bearish close on this candle. The next day, you do see we trade lower. Ultimately, to me, what I'm seeing is this is an area of support potentially, especially within the wick of this candle. And so let me just put that real quick so that you can see how I would label this real time. And so it doesn't even reach there, right? And so I really like to see that just in the sense that with all the news and everything that was being released, an unwillingness to trade down to certain levels or even trade up to certain levels kind of can give you clues sometimes. But um, so going into more detail, because what we see here is we had out of the 5 trading days, we had one down close day and then we have 4 up close days, right? So it was definitely more beneficial in a sense to be a buyer, but we'll kind of dissect that a little bit going to the smaller time frames. So here on a 4 hour, then again, those daily dividers, right? I really love those. Just I guess since we're in this area now, I will go over and show why that's marked. But similar to how on that daily chart I was just showing, I wanted to see like that wick kind of hold as a area of support for price. Uh, Also looking vice versa for this area, right? These up close candles to potentially show some sort of resistance, right? To hold price from trading higher. And so we do see that the first time it came up here, there was a nice rejection. And then we got a little bit aggressive. We did close above it a little bit, right? We had a few candles trade away from it, but not much momentum shifting here from, being a buy or being like a buy program or just bullishness or a rally, however you want to describe it, right? And then we get a lot of basically consolidation up in here to close out the week. But with this aggressiveness on this drop, right? Then it returned higher, and then we actually made a new high of the week in the last 4 hours of the week. So that's interesting to see going into next week. And looking at the hourly, getting a little bit more detail here. So this red line and this red line are part of that weekly Fibonacci. So if you're seeing these two, that's part of weekly Fibonacci, right? This area here, there are things called sessions within the market, and I tend to use those ranges as like key levels depending on, the situation. So this is actually the what's called the Asian session low. And I was watching this level because I liked how London could not close below it. And then once we got busy on Thursday with CPI, there was a lot of interest as far as like trading lower than it, but price was not willing to commit with any sort of momentum below it, right? We had one candle close below it, and then the very next candle, right, we saw it close right back above it. And I like to see things like that. That kind of tends to give clues when you see sharp reactions like that. But also being completely honest, when something like CPI hits the market, it can be very, very, very volatile, which you see in the last video, just like immediate, right? Just, repricing like within seconds, like large ranges being created. So you really want to be careful if you are somebody who's a speculator or thinking about trading the markets, because you can really get hurt on days like that, trying to, basically gamble because it's ultimately a 50-50. You kind of want to wait until days like this happen so you didn't have more information to use moving forward the next days because these markets are always moving. There's no need to force anything or to try to gamble on something like this thinking you're going to have a life-changing day when the life-changing to me is just from being consistent. So just again dissecting this hourly, so let's go back to the beginning of the week. Right, so got the beginning of the week here, and the opening price is this yellow line stretched out. So we see how we were just pretty much consolidating, right, on that opening price. Saw a nice rally up on Monday morning, followed by a nice drop in London close. But what you see here is that same situation where I had this down close candle. I'm really looking at that wick to be like my first area where I want to see some sort of reaction, right? So we see nice reaction here. We trade through it, but we don't get any sort of body committed on this hourly chart, and we get a nice rejection going into right Tuesday morning, which was now we bring in the news, right? Which was Fed Chair Powell speaking, right, at 9 a.m. So at 9 a.m. Tuesday, right, January 10th, 9 a.m. Eastern time. This was when Powell began speaking. It was some foreign bank that he was speaking at, and you see the reaction in the market was to trade higher, and a little bit of consolidation here. Ultimately, though, going into end of day, right, we do trade higher again, that little end of day push, which I'm starting to appreciate more potentially, to even look for setups within that time frame as well, because they've just been giving it up for real. But then after that consolidation, this is marked up here because this is another one of those sessions, right, called the London session. So this London session low, I was really interested in because real clean lows down here. So if price wanted to trade lower, it would have potentially been looking to target this area, right? But we see basically again, all this is consolidation to me. Then we get a nice little rally, more consolidation. This was the Asian low that I had marked up already, right? And there's no news on Wednesday, so this was just just standard here. Um, Consolidation going into this day's London. get to New York on Thursday, CPI. So in that last video, you saw how quickly something like CPI can really move the market. I love how on the hourly chart, though, it did trade up to one of those Fibonacci levels. And then we got that rejection from there. The problem was that there was no commitment, like I said, below this low, right? Once we traded below it, we kept snapping back above it. And that's really just a clue that price probably has ran as low as it wanted to for this particular day. And it may just do something like consolidate into the close. But ultimately, we did that. We had a nice little rally. We traded into that 4 hour resistance that I showed. We reject a little bit, but ultimately just kind of consolidating around it, right? Even this really just consolidation. We see going into Friday's London session, a rally after price came and took out the London low from over here. I mean, the Asian low from Thursday, right? This wick comes down and takes that out. So I'll also just mark that up real quick, just for the sake of me caring too, right? So see how we trade, well, the opening price of the day, we trade below it. And then in London, we trade below it, right? We're back into this resistance, quote unquote. One more time lower, below this low again. So that's why I kept this here. But I'm very interested in a level that has these sorts of reactions around it, right? No commitment though. We get a small, so we close below it. We get a second close below it, but look at this small candle, right? There's not much activity here. Then this very next candle trades lower, rushes higher, back within that range, right? So when you see something like this, again, it's just a clue in a sense that, you know, whatever was under here, as far as I look at it like a liquidity, it grabbed it and it was able to then trade higher. And so we do see again that on Thursday, 8:30, so within this candle here at 8:30, that was that first immediate sharp drop. Ended up closing higher, and then, well, closing higher, and then we trade lower again, failed to take out that low, failed to go to London's low from Wednesday, and then as we ran into that resistance and everything else that I just explained. So now I'll just kind of drop down through the time frames to close this out, and then we'll do the outlook for next week. But this is just a little look at a 30-minute, right? I try to keep things simple. I understand for sure what every like rectangular box, all the different colors and things like that, what they stand for. Of course, you know, from my experience, I had to color coordinate things and figure out a system that worked for me so that I wouldn't get confused by the things that I was seeing. 15-minute. All right, so we do see, right? So get that real inside perspective of how it was trading. So on the 15-minute, you see that weekly open looks like, you know, right, a rally, trade lower, basically into the gap from when a week open. Then from that, a nice reaction higher. Whatever was up here, right, that caused the market to drop, that support level, get busy with Powell speaking, ran higher, but we did get a nice little retracement. And then just real choppy, but continuation, consolidation. Ultimately, I'm seeing this as all consolidation. Get a real choppy push up on Wednesday. No news this day though. Consolidate into the next day. And then we get to Thursday CPI. We got real busy, right? But still real choppy. So not high probability. I honestly was staying away. I didn't really see anything in particular to make me want to get into trades during the week. But this is why again I'm doing these outlooks and reviews so that I can make sure that I document the way that I'm analyzing and then as well as the way that I'm taking advantage of that analysis on a week-to-week basis so that I can make sure I'm improving on that so that my consistency can get better. But so then again, just seeing on the 15-minute, we trade into that quote unquote resistance, right? We start to kind of consolidate up in here. We come into Friday, we get a nice drop starting early morning, trade down to some area here of potential, right? What I would call support. Anything that it causes price to run higher from it, basically I'll call it support, even though there may be another way that I view it or a different way that I call it, the concept in particular, but support resistance are going to be the easiest way to describe these things right now. And then basically right here, just quote unquote resistance, we start to consolidate within there into the close of the week. And then last but not least, just the 5 minute chart. Again, we do see a little bit more of those imbalances, and this is more so, right, where you kind of, like I said, you want to get nitty gritty with this from, the monthly all the way down, because then this gives me more perspective here as far as like, okay, why did Friday, find support at this area? Well, I have it marked up here on the 5 minute showing me that, right? And then this potential resistance, we kind of blew right through that, found support there. And then again, we, already went over all of these levels. So now just going into the outlook for next week. So very simple. We've had a new swing low confirmed from Tuesday when Powell spoke, and we took out a swing high as well. So path of least resistance is still technically prices moving higher, but the cool thing is that on a smaller time frame within these areas, there are also, just like I showed you on that 5 minute, right? There's reasons up here that could potentially cause price to trade lower from them, right? There's areas up here that could see price have a drop from. So we'll see how that goes. And I'll talk to you guys in the next video. Thanks for tuning in.